Welcome to another interesting edition of the Market Review, where we bring you key developments in the financial and capital market as it affects the economy. Today, we'll be looking at the September 2021 Monetary Policy Committee meeting and implications for the capital market. This meeting is holding this week, and we want to just look at how that will affect the market. We need to have this conversation. It's Mr. Johnson Chukwu, Group Managing Director, Cowry Asset Management. Nice to have you on the show.
Thank you, Atabas, for having me. Good morning.
Yes, thank you very much. Before we begin the conversation, let's give you a wrap up of what happened in the market from last week. First is that the Board of the International Organization of Securities Commissions, IOSCO, published guidance covering its activities in regulating and supervising the use of artificial intelligence and machine learning by market intermediaries and asset managers, following its consultation report published in June. Also, the Securities and Exchange Commission assured the Central Bank of Nigeria that it will support the development of the central bank digital currency, as it will have a positive impact on the capital market when it's rolled out in October. Mr. Lamido Yoguda, the Director General of SEC, made this point as a speaker at the Charity of Bankers of Nigeria Advocacy Dialogue recently. He believed the CBDC will help to boost financial inclusion in the capital market. The Nigeria Exchange Group last week held its 60th annual general meeting through the hybrid format in alignment with the COVID-19 protocol. The meeting, which was coordinated by Mr. Bimbola Gumbanjo, the chairman of the NGX Group, had 85 proxy forms which were received, providing the required quorum for the meeting. At the meeting, he assured shareholders that the Exchange Group is well diversified through its subsidiaries to create value and achieve profitability post-mutualization in the capital market. Mr. Gumbanjo said the group plans to optimize its partnerships to deepen its activities. Also, for the ProShares table, the August 2021 Capital Market Service Report was released last week, which showed the Nigeria Exchange Limited continue to lead in the capitalization of the market ecosystem with a market size of 38.57 trillion naira, followed by FMDQ with a debt market size of 24.44 trillion naira, while the NSD PLC came third with a market cap of 646 billion naira. This means the NGX accounted for 61% of the market size, while FMDQ came second, accounting for 38%, and the NSD was 1% of the market. We'll take a break, and when we return, we'll continue this conversation.
The ProShare mobile app, your non-stop access to financial and economic information. With the ProShare app, you can customize your preferred news and videos. You can also get access to latest financial and economic news. Watch videos related to business, economy, financial markets, and lots more. The ProShare app gives you in-depth market stats from the NSE, FMDQ, and NASD. That's not all. You also get real-time alerts. The ProShare mobile app. Information at your pace and in your space.
Welcome back. If you joined the Market Review show, where we discuss developments in the financial and capital markets that affects the economy, we have as our guest Mr. Johnson Chukwu, Group Managing Director, Cowry Asset Management. We'll be discussing the September 2021 Monetary Policy Committee meeting, which is holding on 16 and 17 this week, and looking at its implications for the capital market. First, let's have an overview of the economy, Mr. Johnson Chukwu. The 5% growth of the recent second quarter 2021 report that was released by National Bureau of Statistics. How did you receive that, and how does that give us a trajectory of stable growth and, of course, liquidity at this time?
Once again, thank you for having me. When I saw the figure of GDP growth of 5.01% in the second quarter of this year, I felt a sense of relief in the sense that we are seeing a more improved growth, an improvement in the growth rate of the economy. But that I also took cognizance of the fact that that growth was largely as a result of the base effect, considering the fact that measuring second quarter 2021 economic activities to second quarter 2020 economic activities. And if you recall, the GDP actually contracted by about 6.34% in the second quarter of 2020. So the growth we saw of 5.01% had a lot of what you may call base effect impact in it. But nevertheless, it's a material improvement from what we witnessed the first preceding 2 quarters. Last quarter of, or the fourth quarter of 2020, we saw a growth of 0.11%. And the first quarter of this year, we saw a growth of 0.51%. So the growth of 5.01% was a material improvement, significant improvement compared to those previous growth rates.
And we saw that services sector picked up very well alongside, of course, agriculture will always be providing that growth, and other key sectors like the ICT. But of course, in our conversations, you've always been emphasizing the need for these sector drivers to reflect in the market. Are you seeing those prospects in terms of more prospective listings and reflection of the economy in the capital market?
Okay, if you look at the structure of the Nigerian economy and you consider the fact that the largest contributor to the economy is agriculture, which accounts for more than 22% of the GDP. But few operators in that sector are listed. I think over 2 or 3 of them are currently listed on the exchange. But the second largest contributor, which is trade, which actually telecommunication, has a reasonable percentage of their operators listed now, because today the ICT sector is the second largest contributor in the economy with about 17.82%. Then, so you have almost all the majors, apart from 1 or 2 that are not listed on the exchange. So that's a bit reflective of the general economy. And even if you look at the share of those operators in that economy on the exchange, they actually account for a reasonable percentage of the market activities or market capitalization. Then the next contributor to the economy is trade sector. Trade sector also, because of the informal nature of trade in an Nigerian environment, many operators in that sector are also not listed. I mean, trade account about 16.6% of the GDP. Then you move on to the manufacturing sector, and then the oil and gas sector. The major oil and gas sector operators, the upstream operators, only one is listed today. So which, if you look at those who contribute, who have the largest share of activities in the oil and gas sector, most of them are not listed. Then the manufacturing sector I mentioned, you have a few operators listed, most of them are also not listed. So in effect, the market is not really reflective of the general economy. I mean, the capital market is not yet reflective of the general economy. Of course, we know the reasons that our economy is largely still informal. The structures, the formalization of the economy still have a long way to go. I did mention the issue of trade. Most trade operators are not formalized. You have a mom and pop shop here and there, one in the brother and sister companies operating trading activities. But hopefully, as our economy advances and we have more formalization, we should have the major contributors of the economy reflected in the capitalization of the Nigerian exchange.
All right, Mr. Johnson Chukwu, I just wanted to give you a word to this recent development around the central bank digital currency. Like we said in our news recap for last week, the central bank, of course, is ready for this. The Security and Exchange Commission is going to support this, and they say it will help to improve financial inclusion in the capital market. You know, our coverage of the market is still very low, and there's a lot of work to be done. What areas do you see this leveraging to improve the market growth in Nigeria?
What the central bank wants to do is to use this as a way of further expanding financial inclusion. As we know, a lot of young people may not be active in the financial system, but adopting a digital currency will actually be bringing it to the footsteps or the doorsteps of the next generation of Nigerians who are very adept at use of cryptocurrencies or digital currencies. So I think what the central bank is doing is in tandem with the development in the world. As you may have observed, a country like El Salvador has actually adopted cryptocurrency, Bitcoin, as its legal tender, as its official currency. So it's currently using Bitcoin, its own Bitcoin, which is called Chevo, and the US dollar as a legal tender in their country. And we've also seen other countries recognizing Bitcoin or cryptocurrency or digital currency as a medium of exchange. So as it stands today, the central bank is actually moving to be in conformity with the trend in the global social and economic space.
Yeah, very, very clear. Now let's look at the inflation trajectory and the implications for the capital market. As you know, we're still within that 17% band, but it's decelerating, not as fast as one expects. Considering this bullish growth and then the fact that it's decelerating slowly, inflation, what would be the implications for the capital market currently?
The key thing is that for investors, they are looking at what is the real value of their return, either in the capital market or other market segments. And we know that when you have high rate of inflation, it erodes the value of the local currency, and that affects the real return on investment within the local economy. Yes, granted that we were seeing some moderation in inflation rates, but unfortunately, if you look at the moderation we saw in the month of July, where we had a material moderation in food inflation, unfortunately, we saw a reversal of the decline in core inflation. We saw an increase in core inflation by about 0.63%. And that, for me, became worrisome because the implication of a reversal in the trend, in the decline in core inflation, is that we're beginning to see the impact of depreciation of the local currency on core inflation. So if we continue to see, and if you see what has happened in the past couple of weeks, we saw a deterioration in the exchange rate from about 506 to about 530, 532, 535 naira to a dollar. So that will further reflect in core inflation in the month of August and subsequent months. So investors are going to price in what's happening in core inflation as it relates to the value of their return from the capital market. And if this continues, you're going to see lukewarm investment in the capital market. We have already seen a lot of people standing on the sidelines, which is why we have seen a very weak performance of the capital market in the past couple of weeks. Yeah. So I think a major factor that would be of interest to investors is a trend in inflation. It's not just that inflation is coming down, but food inflation is what dragging down inflation, but we're seeing a reversal in core inflation, which is reflective of the depreciation of the local currency. So I think should this continue, you see people voting to invest in instrument that will kind of insulate them or moderate the loss in real value of their investment, and that you could see investment in fixed income instruments that are foreign currency denominated.
Because inflation has a way of eroding those values, particularly at the time that per capita income still needs to improve. Let's look at the MPC proper. Of course, the central bank will be greeting the fact that we have a positive growth, fresh from second quarter 2021. We'll also be looking at the inflation rate. Of course, looking at the current challenges in the economy. What would you say will inform their key decisions apart from the inflation trend and the bullish growth?
Well, I think the three major factors they have to consider is the one, the depreciation of the local currency. So they have to be mindful of taking further decisions. If you remember, the decision to stop sale of FX to BDCs was taken at the last MPC meeting. And unfortunately, I don't think the outcome has worked that well because one, I'm sure the MPC members were thinking that we're going to see appreciation because it was assumed that abuses by the BDC operators was what was dragging the exchange rate. But fortunately, that decision ended up narrowing the outlet for assessing FX for those in the farmer segment of the economy, and we've seen the negative impact on the exchange rate. So they will consider the pressures on the exchange rate and the current trend in the exchange rate, integration. We're going to look at the fact that we've seen a moderation in inflation to 17.38% in the month of July. So that will be a factor in determining, and then they're also going to look at the growth in the economy, where we saw is the 5.01% growth in the GDP. But they have to be mindful of the fact that it was largely driven by base effect, and those sectors that grew massively may not repeat themselves, such as the transport and storage sector that grew by about 76%. They may not be replicated. Growth in trade about 20% may not be replicated in subsequent quarters. So the key thing is, how do we ensure that we maintain growth as well as continue the current trend in downward movement of inflation rate? I think those are the major factors that you have to consider.
Yeah, and Mr. Johnson, when you look at the decisions, already in October, we expect that the Eurobond will come up board, and of course we have the special drawing rights, which adds like $3 billion to our reserve. What do you expect to see happen? Do you see any surprise in terms of increase in the NPR, cuts in the CRR? What will be the likely trend?
No, I don't think the fact that we are having this new allocation on a special drawing right, and that we are assessing the Eurobond market in the coming months will be a major factor. Simply, these are not flow. What matters if you have to take a decision is, are you having a steady flow? These are one-off injections into the reserve which if you take any decision that could lead to an erosion of that one-off, you're not going to have it replicated. So the central bank and the monetary policy committee will have to take cognizance of that. Granted, we're going to have a temporary boost in our reserve, but should you take any policy decision that would lead to increase the demand for forex, you could have that eroded and you're not going to replace it because it's not a flow. I think what will be of paramount importance to the decision makers in the monetary policy committee is one, I mentioned earlier, how do we ensure that the growth we saw, while it might moderate in the third quarter, it should not moderate drastically. And then how do we stimulate some of the sectors of the economy that have seen slowdown in growth? One of which is the agricultural sector, where we have seen consistent quarter-on-quarter decline in growth from about 3.42% in the last quarter of last year to 2.28% in the first quarter of this year, now to 1.3%. And like as we know, that's the largest contributor to the GDP. We've also seen consistent decline in the growth rate in the ICT sector. So those should be of paramount importance. These are the two largest contributors to the GDP, and whatever decision they will take have to bear in mind the impact of that decision on these two major critical sectors of the economy.
And beyond the economy, in 30 seconds, the equities, fixed income markets, how will this really impact these critical two segments?
We might see a further shift in investment in the fixed income space. Now that the federal government is coming up with a Eurobond offer, and we know there are some corporate Eurobonds also coming to the market, investors may want to safeguard their assets or their wealth by investing in foreign currency denominated assets that are not likely to be eroded by inflation and exchange rate devaluation.
Very interesting. Very interesting. We'll keep our eyes on how the outcome will be. The MPC meeting taking off from its traditional Monday, Tuesday, 21st, 22nd to the 16th and 17th this week. And so that means that on Friday by 2 p.m., 17th of September, the governor of the Central Bank of Nigeria, at the end of the MPC meeting, Monetary Policy Committee of the Central Bank, will reel out the key decisions. So we'll watch out to see because of the implications on the capital market. I also know Mr. Johnson Chukwu will also be on the ground to watch and monitor what happens there, the signal into the markets. But thank you very much, Mr. Johnson Chukwu, Group Managing Director of Cowry Asset Management, for this interesting conversation looking at the possibilities from the September 2021 Monetary Policy Committee meeting of the Central Bank of Nigeria and how it will impact the capital markets. We will continue to update our viewers on the outcome of that. Thank you once again for the time.
My pleasure.
And that will be all for this edition of the Market Review Show. If you want to get further updates and insights around the developments of Monetary Policy Committee meetings of the Central Bank of Nigeria, all you need to do is to log on to our website, www.proshareng.com, and you get all the updates as you search on our bio of the site. Also, you have questions or comments or suggestions around this September Monetary Policy Committee meeting and how it will impact the capital market. Send your views or comments or questions to otobasi.abasecon@proshareng.com. Also, follow our social media platforms displayed on the screen. Don't forget this period that you need to stay safe. Till we come your way again, thank you for watching and have a nice day.